What should you do when the stock market goes down? So recently we've had some volatility in the markets. We've had the Dow Jones drop over 1,000 points in one day. So this creates fear amongst investors. You know, we've been advising people who are approaching retirement now for over 2 decades. Not one of them has been worried about the stock market going up. They're all fearful of it dropping and how it could impact their lives. So I want to give you 5 things to consider. First one, please do not panic. Make educated decisions. Remember when we were in school, those fire drills we used to do? The reason why we used to do this is when there was a fire, not everyone would run out the door and have a stampede. So it was to stay disciplined. So the first thing, do not panic and make knee-jerk reactions. The second thing you should look at is your allocation of your portfolio. You want to make sure that you have a diversified portfolio, not only in sectors, but in whether you should have fixed income to protect you from the gyration of the stock market, potentially CDs, hybrids that would avoid any loss in case the markets are dropping. The third thing, which I think is just as important, where many people that I tend to see will not have, and that they should have 6 months to a year of expenses in the bank in case of an emergency. Why is this so important? Well, if the markets are going down, and Murphy's Law tells me when I need money the most, the markets are down. If I have 6 months to a year of expenses in the bank, well, guess what? I can wait and not have to sell assets while they're down. So the fourth thing that I think everyone should really be considering is this is the opportunity for you to do Roth conversions. I have been stressing this for now 15 years during my career, and that is making sure that you do take the opportunity and do Roth conversions while the markets are down. So when they do come back, which historically they will, you now have this money growing tax-free. And the best part about this is when you reach the age of RMD, you've avoided all the required minimum distributions. So you not only have that money going tax-free, you control when and how you access this money. And 5, make sure you get a second opinion. Gosh, making sure that all of these allocations are set up, your Roth conversion, your planning is all being done. Make sure you have a second opinion to make sure these things are being done. There's no such thing as a set it and forget it. Why? The economy is moving. The tax laws are changing. Everything is going around. You cannot have a plan that was done 20 years ago really work today. So making sure that that plan is proactive so that you're not making reactive decisions to do so. Make sure you address these 5 key areas to protect you from the next market downturn so that you stay disciplined and you're proactive. Thank you for watching, and we will look forward to catching you on the next one.
For you.